Hello everyone and welcome to today's session on input tax credit under GST. We all have heard about One Nation, One Tax System GST, which aims to improve India's competitiveness in global markets. And also it gives ease of doing business by having uniform tax rates and structures across all states and union territories. Friends, it is important to learn about imposing tax and monetary arrangement without which it becomes pretty tough to keep up with the competition. At Faculty of Commerce, SMPIC, we believe our students should not only be well versed with the theoretical aspects, but should be industry ready to lead the market and be well equipped with the required skills. On behalf of Faculty of Commerce, SMPIC BCom Honors, GLS University, I, Dr. Bhavna Parvani, welcome you all in today's session on input tax credit under GST. Now, I request our Dean, CA Dr. Marzun Choki sir, to deliver welcome address.
Thank you, Bhavna ma'am. Good morning, CA Sonal Jain, the resource person of the day, dear students, Dr. Bhavna ma'am, Dr. Bhavin sir, and Anjali ma'am. As shared by Dr. Bhavna ma'am, that GST is considered as probably India's biggest tax reform since independence. And GST has brought the nation to a common market, simplifying the tax structure and ensuring greater compliance. Or we can say that GST marked the beginning of a new journey for India. And GST is a tribute to the maturity and the wisdom of India's democracy. Today, we are fortunate to have with us young and dynamic chartered accountant Sonal Jain. Dr. Bhavna ma'am will formally introduce Sonal Jain, but let me take the privilege over here of mentioning that CA Sonal Jain has till now conducted more than 100 sessions on this topic of GST at various academic forums, maybe at the national as well as international platform. But for all of us, the most important is that CA Sonal Jain is SMPIC alumni. And on behalf of Faculty of Commerce, I extend gratitude to CA Sonal Jain for taking time out for today's session. Thank you, Sonal.
It's my pleasure, sir.
Though GST may be sounding difficult for few, but I am sure that today's resource person, CA Sonal Jain, is probably going to break it into more understandable and simple concept. And today's session is going to be enriching for the students. I appreciate and acknowledge the efforts of Sneha ma'am, Bhavna ma'am, and Bhavin sir for planning and coordinating today's session. Thank you so much. Bhavna ma'am, you may please take it forward.
Thank you so much, sir, for your constant support and motivation. I would like to introduce today's presenter, CA Sonal Jain. She is practicing chartered accountant and partner in Misri and Shah Chartered Accountants. She heads indirect taxation apart from GST as a main domain. She also practices in the areas of customs and FEMA. She is also actively involved in work of restatement of financial statements for SME listing, valuation of business, consolidation, transaction advisory, etc. Her academic achievements have also been very outstanding. She was a school topper in SSC and HSC examination. She stood 5th in accounts at state level talent hunt. She secured All India 24th rank in CA final examination. Further, she has secured exemption in all subjects in IPCC and CA final examination. She has been awarded gold medal for the subject of financial reporting in CA final exam by Ahmedabad Chartered Accountants Association for securing highest marks in Ahmedabad. She is a Gujarat University rank holder in BCom exam. She stood first in college, SM Patel Institute of Commerce, in her last year of BCom. Yes, I feel so proud to have our outstanding alumni here. She secured second rank in Gujarat University in her Master of Commerce, that is MCom. Thank you so much, Sonal Jain, for accepting our invitation. I'm sure students will get to know a lot more from your expertise. Over to you now. Thank you.
Thank you so much, Joki sir and Bhavna ma'am, for such a warm introduction. And thank you, Bhavin sir, Sneha ma'am, for giving this opportunity. And now I think so we should start with the session. Okay, so I hope to all the students the presentation is visible.
Yes, sir.
Okay. Bhavna ma'am, our screen are getting swapped.
Yes,
Yes,
it's
yes.
fine, baby. You can start. You can
Okay.
start.
So friends, our today's topic is input tax credit under GST. So first of all, as a speaker, the reason of taking this topic is like basically I can say that input tax credit is the heart of the GST because everything is related to input tax. And if you are clear with the concept of input tax credit, in future, if you are doing business or you are going into industry or you are working in the accounts domain, finance domain, it will be very much useful for you. And the today's session objective, as Bhavna ma'am said, it is more on the practical aspect. Like within 1 or 2 years, you all would be into business. Either you would be entrepreneur or you would be going for job. Then you should be having basic knowledge of GST. And the reason being, as Marjun sir said, that GST is now a biggest tax reform, and each industry, whether it is small industry, big industry, everywhere GST is impacted. So as a businessman we should know this, or as a person who is into job domain or into finance domain, we should know. And first of all, as a commerce student, we should have the clarity of all the aspect of input tax credit. So friends, my today's session is covering four aspects. The first aspect is basics of input tax credit, where I will be taking you with the what is the definition of input tax credit, what is covered into that. The second important concept is what are the conditions, like if you are availing any input tax credit, which are the things which should be taken care. The third thing would be understanding the block credits. Now, what are block credits? These are the credits which you are not eligible to claim the credit. Means if you are getting this services or this goods as your purchase, you cannot claim the credit. And why you should know that? So that you can take a business decision that whether this input credit is eligible or not. On a simple term, if I take a practical example, say your father is having a business and he is having a GST number. His business is of trading of fabric textile, and say tomorrow he is buying a car of 10 lakh. On that 10 lakh car there is a say GST of 1 lakh 80,000. So generally what is the mentality that if in GST is charged on invoice, we shall claim the input credit. But here under the block credit list, car is included under block credit list. So the input tax credit of car is ineligible. This was just an example. In this session, I have covered all the aspect of block credit list. This list, we as a commerce student should know that this ITC is not available. The fourth agenda of my today's session is in recent budget, like budget 2022, there are various changes proposed in GST. So we will learn that what are the changes which are impacting the input tax credit. So first thing, as a very basic concept, GST is the summation of both tax on goods as well as tax on services. So basically earlier in India, we had a VAT and we had a service tax, or we had a excise. Now all these things has been eliminated and there is a concept of GST. GST came in July 2017, and thereafter whether it is supply of goods or whether it is supply of services, on everything GST is levied. Now, if you understand, as Bhavna ma'am said that it is one of the biggest tax reform, then yes, for India, the GST is the biggest tax reform. And the best advantage of GST is that it is actually one nation, one tax. Like, say you are a person in Gujarat and you are purchasing goods from Mumbai, selling into Maharashtra, selling into Madhya Pradesh, then also there is no issue in input tax credit. There is a seamless flow of input credit. Earlier, what used to happen? Say I purchase from outside Gujarat, I need to pay CST tax. And if I'm selling into Gujarat, I need to pay VAT. So set of input credits were not allowed. And under GST, the best advantage is that the set of input tax credit is allowed at all level. So you can say that here somewhere the landing cost of goods get reduced. This we will learn through an example in next slide. So in a very simple way, I would say that GST is one nation, one tax, and it is replaced n number of indirect taxes, like whether it was excise, whether it was CST, whether it was VAT, whether it was octroi, all these have been eliminated. Now, understanding the three main taxes under GST. So they are basically IGST, SGST, and CGST. So IGST stands for Integrated Goods and Service Tax. SGST stands for State Goods and Service Tax, and CGST stands for Central Goods and Service Tax. So there is one more called UGST, that is Union Territory Goods and Service Tax. So we know that there are certain union territories in India, for that UGST is levied. But on a main head, there are I, S, and C. So if you want to know that when which tax is levied, so it is very simple. Like if you are within the state, say you are into Gujarat and you are selling and buying within the state, you need to charge CGST and SGST. Like I am a trader and I am trading on clothes. Then when I'm selling that clothes to retailer, to end user in Gujarat, I'll be charging SGST and CGST. And say I'm the person who is supplying goods outside India. In that scenario, I'll be charging IGST. The total tax amount will remain the same. Say the tax rate is 18%. Then if I'm selling outside Gujarat, I'll be charging IGST at the rate of 18%. And if I'm selling within Gujarat, I'll be charging 9% CGST and 9% SGST. So when it is in Gujarat, you divide the 18% into two parts, C and S. When it is outside Gujarat, you charge entire amount. Now, coming to the second part, say you are importing any goods. Earlier on imports, you need to pay basic custom duty and excise duty, countervailing duty. Now, instead of that countervailing duty, you need to pay IGST. So, on a very simple term, if you want to determine the charge, that which tax should be levied, so this is a pictorial diagram which will make you understand that how you need to charge, like which tax should be charged. So say location of supplier, that means the businessman, and the place of supply means where the service is rendered. If both are at same place, say it is Gujarat, in that case, the charge would be, it would be called as intrastate transaction, and charge would be CGST and SGST. Understood? See, again I'm repeating. If location of supplier and place of supply both are at Gujarat, it is called as intrastate transaction, and charge would be CGST and SGST. Now, if the location of supplier and place of supply are different, say location of supplier is Gujarat, place of supply is Rajasthan. In that case, it would be called interstate transaction and tax levied would be IGST. Clear? Now, under GST, you get input credit for three things. One is goods. Like for my business, I have purchased raw material, I have purchased packing material. I get input credit of everything. The very simple fundamental for claiming input credit that it should have nexus to your business. So any goods, any services, any capital goods used in nexus to your business, you are eligible for input credit. There are certain more conditions, but this is the primary condition. So goods, it is very simple to understand, which are raw material or which are packing material or which are ancillary purchases. These purchases are eligible for input credit. The services, it includes professional services, it includes transportation services, it includes repair maintenance services. These all are services. So for service also you are eligible for credit. The third concept is input tax credit on capital goods. Now what GST it tells that anything which is capitalized in your books of accounts are capital goods, and it includes plant and machinery. But it includes three things. First is land building, telecommunication, and pipeline laid outside the factory. So basically government want to tell you that in any scenario you are not eligible for GST paid on land building. Clear? Now there is one more thing related to capital goods. This is an accounting concept, but which we should know as a commerce student. See, if you are claiming depreciation on capital goods and you are claiming depreciation on price including GST, then in that case you are not eligible for input credit. Say I have purchased a machinery of rupees 100 and say on that there was a GST of 10 rupees. Then, if I am capitalizing that fixed asset in my books of account with 110 and I am claiming depreciation on 110, then in that case, I won't be allowed to claim the input tax credit of 10 rupees. The input tax credit of 10 rupees is eligible only if I charge the depreciation on basic value, that is 100. Clear? Again repeating, you need to capitalize a fixed asset without including the GST amount. Then only you will be eligible to claim input credit. So basically your landing cost should include only cost of goods and not GST amount. GST amount should be taken to GST ledger. If you are claiming depreciation on value including GST, in that case you won't be allowed to claim the input credit. So this was the first thing which we understood as a basic concept of GST, input tax credit. Now the second thing, as I said, condition for availing input tax credit. So friends, this is the section in GST which has rigorous amendment. I would say that since the inception, it's been hardly 4 years of GST being came, but within 4 years, I would say there are n number of amendments. In the screen itself you can see that how within certain period there is amendment in this section. So in the initial, when the law came, it was told that you can claim the input credit based on the possession of invoice and actual receipt of goods. That means I am a businessman, I am doing manufacturing of say cable wire, I have purchased the PVC, I have purchased the copper. Then on purchase of that PVC and on purchase of that copper, if I am having that invoice and if I am having actually those goods, I can claim the input credit of my purchases. But then later on it was amended and it was told that you should not only have possession of invoice, you should not only have received the actual goods, your supplier should actually have paid the tax to government. See, earlier it was told that your supplier should have paid the tax to government, but now it is told he should also file his return. So if I give you a simple example, say Mr. A, this I'll tell you through this. Just a moment, I'm just taking you to that screen. Okay, so you can see on screen how things flow. Same Mr. A is selling goods to Mr. B. Dealer A is selling goods to Mr. B and charging CGST and SGST. Now, here as dealer A is selling goods to Mr. B, dealer A need to pay the CGST and SGST collected from Mr. B to government. Like Mr. A has sold the goods to Mr. B. Mr. B would be giving basic price plus GST to Mr. A. Now Mr. A need to deposit that GST to government. Mr. B will get credit only if Mr. A paid that GST to government. So just an example, I am going to a shop, I am purchasing raw material of say 100 rupees plus 18 rupees GST. Now 18 rupees input credit I am eligible only if that supplier is paying that 18 rupees to government and showing in his GST return that he has sold this goods to Sonal and has charged 18 rupees GST. So basically, when that supplier will file his return, then in my login, in my GST login portal, there will be auto-populated GST credit. Like system will automatically tell that Sonal has purchased this much goods from Mr. A and this is the value of input credit. If that supplier failed to file the return, I miss the credit. So it is purely automated system. Now in GST, government is telling that he will not trust our purchases. Our purchases should be auto-populated. Means if supplier is telling that he has sold goods to you, then only it would be validated that yes, this is my genuine input rate. So in a simple term, under GST, it is mandatory to file all return on timely basis by our supplier, because if my supplier fails to file the return, I won't be eligible to claim input credit. Again, we are going to the first screen. This was just an example. So for condition, the first condition is possession of invoice. The second, you should actually receive the goods. So for example, I have told someone to supply me goods. He has issued me invoices, but I have yet not received those goods. Then I am not eligible to claim the credit. The third thing, my supplier should have paid taxes on same to government. The fourth thing, he should have filed the return to government. And the fifth thing is, he should have actually uploaded the invoices in the portal, and in that invoices my name should be there. That means he should actually tell to GST in the GST return that within month he has sold this much goods to this party, and through that only input credit will be flowing to the buyer. So a very simple example. Earlier, what was happening? Government was giving you a relaxation up to certain percentage. Like I have purchased goods, but certain supplier missed to file the return. Then government was telling that he will allow up to 20% variation. He will allow up to 10% variation. He will allow up to 5% variation. But now that variation has been completely eliminated. So if I tell in a very simple term, whatever purchases I am doing in my purchase register, that comes into auto-populated register in portal. And that auto-populated register is called GSTR 2A. So if I explain you in a very layman sense, as I told you that I have purchased goods from supplier. Now supplier will be filing his sales return. His sales will become my purchase, and this purchase, automated purchase, will come in table GSTR 2A. So earlier government was telling that if your auto-populated 2A is lower by 20%, it's fine. Then government amended it to 10%. Then government amended it to 5%. Now they are telling you cannot claim a single rupee in excess to your GSTR 2A. So take this example. As per my books of account, means my actual purchase shows my input credit of 50,000. Means within month I have purchased so many goods, and on that input credit is 50,000. But in my 2A, auto-populated 2A, input credit is only 35,000. So earlier at the inception of GST, I was allowed to take input credit as per books of account. That means entire 50,000. Later on, I was given a relaxation of 20%, then 10%, then 5%. And now from the 1st October 2022, government is telling that it should be restricted to 2A. Means what is coming automatically in your login, that is only your eligible purchase. Now this thing is the set of mechanism under GST. So basically under GST, I purchase goods from Gujarat as well as from outside Gujarat. So whenever I purchase from the Gujarat, I will be having CGST and SGST as my input credit. And if I'm purchasing goods from outside Gujarat, I will be having IGST as my input credit. And if I'm selling goods within Gujarat, I will be charging C and S. If I'm selling outside Gujarat, I will be charging IGST. So how the setup happens, like I need to square off this ledger. So for square off, government is telling that for your CGST liability, first you need to use your IGST balance. Then you will need to use CGST balance. For your SGST liability, first you need to use IGST balance and then SGST balance. For your IGST liability, first I, then C, then S. So practically, in a very thumb rule sense, first you need to use IGST balance for all three liability. And then for C, use C. For S, use S. There is no inter-setup allowed for C and S. CGST and SGST cannot be done inter-setup. And for IGST, government is telling first you use I and then you can use C and S at per your choice. So very thumb rule, first use the IGST balance for all three liability and then for C use C, for S use S and for I it's at your choice. But only condition, no inter-set off of CGST and SGST. Now understanding the third concept, that is blocked credit list. Till now, we understood two aspects. First was basics of input tax credit. The second was conditions for availing input credit. I am just recalling the condition. First, you should have the purchase invoice. You should actually receive goods and services. Your supplier must have paid the tax to government. Your supplier must have filed the return. And your auto-populated GSTR 2A, means your login portal, should show that purchases. Now, block credit list. So basically, block credit list is the list of services or list of goods which are not eligible for input credit. Then the first thing which is included in block credit list is motor vehicle. So basically, you don't get the ITC of motor vehicle except you are into that business. Like I am into business of selling of vehicle. I am into business of transportation of passenger. I am into business of training the people, then in that case it is allowed. But if I am into business of say manufacturing, I am into business of trading of goods, I am into business of trading of textile, then I'm not allowed to claim the input credit of motor vehicle. The second thing is, these are the services or these are the goods which are allowed only into same nature of business. Means I am into business of say trading of the fabric or trading of the utensils in or any business. Other than this, I am not eligible to claim the business input credit. Say person is the business of trading of utensils and he has purchased food for his employee. Then on that food and beverages, he is not allowed to claim input credit. Same way, the person is into manufacturing of wires and cable and he has taken certain outdoor catering food services for his labor, then no input credit is allowed. Say person is into business of profession, like it's an advocate and a person render the advocacy services. Then if he has taken any beauty treatment services, no input credit is allowed. But if it is a beauty parlor and claiming the beauty services, in that case it is allowed. So these are the services where if there is same nature of business, then only input credit is allowed. So it says that input credit is allowed only if goods or services are used towards making taxable outward supply of same category. So if it is a catering services input credit and your supply is also catering services, then input credit is allowed. But if it is catering import credit and my supply is of say trading, manufacturing, then import credit is not allowed. This is one more type of block credit. It says that no input credit should be allowed for life, health insurance or rent a cap. But it should be allowed only if as per government norms, it is mandatory. So there are certain industry where government norm says, like Factory Act says that you need to compulsory take a life insurance for your employees. Or there are certain norms of government which says that in case of call center service, you should give a rent a cap facility. In that case, yes, we input credit is allowed. So when it is mandated as per government, input credit should be allowed. Otherwise, in a normal course for life, health insurance and rent a cap, ITC is not eligible. Then there is one more thing for travel benefits to employee, for health membership of club, health fitness setup, no input credit should be allowed. This is again interesting. One of the biggest block credit. It says that for construction services, no input credit is allowed. For purchase of immovable property, no input credit is allowed. So basically, you are into a business and you build a biggest business center. Say you build a building for your business use and you purchased a raw material of say 1 crore, and on that there was 18% GST. Say you purchased cement, bricks, tiles, and there was 18 lakhs of GST, but that 18 lakh GST you cannot claim the input credit. Why? Because it is included into block credit list. So if I summarize my entire block credit list, it says no ITC for motor vehicle, no ITC for personal use, no ITC for services like beauty services, then food and beverages, then it was outdoor catering services, health services, surgery services. This service is allowed only if same nature of business. And for life, health insurance and rent a cab allowed only if it is mandated by government, and no ITC for membership of club, fitness center, travel benefits. Now, there is even a concept of ITC reversal. In case you are using your input credit partially for business and partially not for business. Friends, this concept is similar to income tax. In income tax, when there is an exempt income, you don't get expense allowed for exempt income. Same way, if your input credit is partially used for business and partially for personal use, you need to do proportionate reversal. Say I am using a mobile phone, and that mobile phone I am partially using for business and partially for some other purpose. I need to pro rata reverse the credit. Same way for laptop, partially used for business, partially not for business. Same way, I'm using this services for taxable supply as well as exempt supply. Say there is a grocery vendor. He has certain product as taxable, like processed food item are taxable, but fruits and vegetables are not taxable. Then in that case, whatever input credit he is taking, he need to pro rata reverse certain credit. Like he is paying a rent of 50,000. On that, he is paying GST of say 5,000. Then that 5,000 input credit will be allowed in the ratio of the turnover of exempt and the taxable turnover. Now, this is the fourth part of the session, which is again one of the interesting part, and I am actually surprised with the fact that this input tax credit concept has been amended almost 7 to 8 times under GST, and the proposed amendment 2022 has made it very crystal clear, saying that input tax credit will be allowed only if it is coming in two-way. So it is removing all the ambiguities and making it very clear that as a buyer you are eligible for input credit only and only it is come if it is coming in your online GSTR two-way. proposed changes in the concept of ITC. So it is telling that first thing, government has now given you one more relaxation in budget 2022. Earlier, what used to happen, say the financial year 2021, currently 21-22 is going on. In March 22, this financial year will get closed. So say in, for example, in April 22, you get certain backdated invoice. Like suddenly you get in your drawer the earlier month invoice. Say April 21 invoice you received from in your drawer in the month of April 2022. So after 1 year, you came to know that this invoice was not posted in your accounts. Then what government is telling that you can put the backdated invoice for any financial year, or if you have missed to claim any input credit for earlier financial year, you can claim that input credit up to 30th November. So basically, that April 21 invoice you can post up to 30th November 2022. So basically for the month of April, you get one full year plus next year till November. Got it? And say for example, you forgot to post March month itself, like March 22 invoice you forgot to post in your books of account. Then that March 22 invoice you can post till November 30th. Earlier, this limit was till September return. Now, government has increased it to 30th November. So, basically, they are giving you additional 40 days time, because earlier it was the due date of September return. That means it was 28th October. Now, it is added to 30th November. So, basically, in GST, you get such a long period time for claiming the input credit. But practically, many a time, this time also becomes a shorter time. So, you get time limit till 30th November for any backdated adjustments. So, basically, earlier it was 1 year from the ITC can be availed 1 year from date of invoice. Earlier it was September, now it is made to November. So basically you get additional 40 days time limit. So this is the proposed amendment which I was telling. Now the taxpayer will be eligible to claim input credit only and only if that input credit is coming in auto-generated GSTR 2A. Again, for your layman understanding, I am telling 2A, but there is one concept called 2B also. So on a very simple terms, 2A and 2B are nothing but your auto-populated purchases. So what government is telling that if it is coming in your auto-populated purchase, then only it is your eligible purchase. So as I made you understand that how system flow, I am again going you through the concept of system flow. So say I purchased goods from Mr. A. Mr. A need to file his sales return, that is called GSTR 1. GSTR 1 on the portal by next month 11th day. So say I purchased goods in the month of January, he need to file his sales return by 11th of January. Once he files his sales return, government will come to know that he has sold goods to how many people. And to respective buyer, government will send GSTR 2B. So I being buyer, I will be receiving GSTR 2B on 13th. So on 13th, I will come to know whether my supplier has shown it as a sales or not. So in 13th, I will come to know, I will receive an auto-populated details of inward supply. This is based on the GSTR 1 furnished by my supplier. Then I need to file my GSTR 3B, means my sales minus my purchases. But this purchase will come automatically. So this example, we already understood that credit will flow from supplier to buyer through this system. Supplier will be filing GSTR 1. From that GSTR 1, buyer will receive input credit, that is in table GSTR 2B or say 2A. And based on that input credit, I being buyer will be filing my GST return. So here the twist, the biggest twist is that your input credits can be denied if your seller is not showing it to government. So basically, I have purchased goods from my vendor, but my vendor is non-compliant, then it is a loss to me. I need to choose my vendor carefully. Those who are GST compliant, then only I should choose them. So in future, when you are going to industry, you need to ensure that from whom company is buying the goods. Are they genuine person? Are they filing the return regularly? So basically, finding the non-compliant vendor is the biggest task, because if you are dealing with the people who are not proper, who are not filing the return properly, it would be very difficult to trace them, and your company will be at loss. You will be a straightway loss of the GST amount. So basically, under GST, if a seller pays tax to government, to tax department, then and then only buyer gets the input credit. So buyer gets the input credit only if seller pays to government. Just understand the implication of this. I have purchased a raw material of 1 crore, and on that GST is of say 18 lakhs. I get this 18 lakh as an input credit only if my supplier is showing it in his return. Say he forget to show, then I am at a loss of 18 lakhs. So here as a businessman, you should be very precise while selecting your suppliers. They should be GST compliant, they should file the return properly. And the impact of this on the costing is big, because if you treat GST as your cost, it is a heat of 18%, and this eliminates your profit margin. So you need to ensure that your supplier is compliant and he files return on timely basis, so that you are eligible for input credit. So now it is your customer have to choose. You as a buyer need to choose wisely that whom you can make your supplier. Customer will choose you only if you are compliant. Means you also need to be compliant in sending credits to your buyer. Like if you are selling goods to anyone, you need to ensure that you file your return timely. Then only your buyer will get the credits. So this was about the 4 concepts which we understood. On a very quick glance, we went through the input tax credit concept. We went through the conditions for availing input credits. We went through block credit list, and we even went through the recent amendments. So we can now take the question answers on this point. Fine, sir.
Yes. Okay, thank you very much, madam. Now
Welcome.
we have some questions raised by our student.
Right.
Hello, am I audible, madam?
Yes, you are audible.
Okay, thank you, madam. We have some questions raised by our student, so I request you to share your views on them. Our
Okay.
first question is that one of our student has said, if I have purchased one mobile phone and I have my father's GST number, so can I claim input tax credit on GST on mobile purchase?
Basically, good question. Like as a youngster, people want to buy mobile के हाँ lectures भी देख सकते हैं, and it's a purpose of use. But you cannot claim the input credit in your father GST, and the reason being that this mobile is not used for your father business. Say you are telling that you are working for your father business, then yes, input credit is allowed. But if it is used for personal purpose, as we learned into block credit concept, the section 17 subsection 5 restrict the input credit of the goods which are used for personal nature. So if it is used for business purpose, then yes, eligible, otherwise no.
Thank you. Now, one another question is, I have forgotten to take one invoice input credit, or can I claim it in the next month? Or in other words, we can say that, can I revise the GST return?
Basically, under GST, there is no concept of revision of return. But yes, you can claim in next month, and the next month timeline government has given till next year November. So basically for say one financial year, say 21-22, if I missed any invoice, I can post till 30th November 2022. So you get a much time period for posting those invoices.
Okay, thank you. Our next question is it necessary for GST credit to come in GSTR 2A, or can I claim input tax credit based on my invoice and the actual purchase?
This was there in the inception of GST. Like when in 2017 it was allowed, but now after the recent budget, input tax credit is allowed only if it is coming in my auto populated purchase, that is GST 2A or 2B.
Okay. One another interesting question from our student. I have purchased GST, I have purchased goods, but the same are not delivered in my premises. So can I claim input tax credit in the same?
This we learned in the conditions for availing input tax credit. It says that your input tax credit is eligible only if the goods are purchased, goods are received by you, tax are paid to government, your supplier has filed the return, and your supplier has shown it in 2A. Now here one condition has been missed, like you have not received those goods. So as you have not received the goods, the condition of section 16 are not fulfilled, and then hence input credit is not eligible.
Okay. Now the last question is, if a person start a new business and buys an office, so can he get GST input tax credit on office purchased?
This is again a point of block credit list. It says that input credit of immovable property is not allowed. So even if you are taking that building for business, for office, input credit is not allowed.
Okay, thank you very much, madam. So I hope you have solved all the queries regarding our student in input tax credit. Now I would like to propose vote of thanks. I express my gratitude towards our expert speaker of today's lecture, CA Sonal Jain, for providing such a valuable information on input tax credit on GST, and especially how to avail input tax credit under GST, as we know that the GST is the biggest tax reform since independence. And madam, you said very nicely how to avail input tax credit, what is block ITC or reversal of ITC. Ma'am, it was our pleasure to have you on this lecture series, and I am sure that today's lecture on ITC on GST will be helpful to our student to understand this topic in better manner. Here, I would like to quote our former finance minister, Mr. Arun Jaitley, sir. He said, the implementation of GST in India is not the end, but it is the start of journey. And it is rightly said, madam. And I am sure with the implementation of GST and summing up all the various small taxes, we can definitely reduce black currency from the economy, as well as we can say that tax evasion will be also on the lesser side. Now, I also thank all my colleagues for constant support and cooperation throughout the webinar. And last but not the least, I thank all my dear students for attending the webinar and making it a grand success. Thank you very much, madam. Thank you all.
Thank you, everyone.
Thank you.
Thank you
Thank you
to
so
my
much.
very own college for giving me this
Thank you.
opportunity. Thank you, students.